participants joining us today for this very special webinar on ITR filing simplified. I am delighted to welcome you on behalf of DigiBuks. As we enter the income tax filing season, millions of taxpayers across the country are preparing to file their returns. While filing an ITR may appear simple, recent changes in tax laws, the tax regime, AIS, TIS, capital gains reporting, and enhanced scrutiny by the Income Tax Department have made tax compliance more important than ever. A small mistake today can result in notices, delays, delayed refunds, excess tax payments, or unnecessary compliance hassles later. So today's session has been carefully designed to help taxpayers understand these 5 points. The most common mistakes people make while filing their returns, key changes applicable for the financial year of 25 to 26, practical tax saving opportunities, how to choose the correct tax regime and ITR form, and most importantly, how to file an accurate and compliant return. At DigiBuks, our mission is to simplify financial compliance and make tax filing easy, accurate, and accessible for everyone. We are fortunate enough to have with us two highly respected tax professionals who bring decades of experience in taxation, audit, and advisory services. They will be sharing their practical insights, real life examples, and actionable guidance that every taxpayer can benefit from. I encourage all participants to stay till the end of the session, note down your questions, and actively participate in the discussion. Let's begin our journey towards smarter and error free tax filing. Thank you once again for joining us. Our first speaker today is CA Ajay Patel. Ajay Patel is a highly accomplished tax professional with experience in taxation, compliance, and advisory. Throughout his career, he has worked closely with businesses and individuals in navigating the complexities of tax regulation and financial compliance. His practical insights make him a trusted tax advisor in the field. During today's session, he will help us understand some of the key tax filing challenges faced by taxpayers and share his valuable guidance on avoiding common pitfalls. Please join me in extending a warm welcome to Ajay Patel.
Yeah, good afternoon, everyone. Yeah.
Good afternoon, sir. It is now my privilege to introduce our second speaker, CA Ajay Jain. CA Ajay Jain is the founder of AJRG Associates LLP and is a distinguished chartered accountant with extensive experience in taxation, audit, financial advisory, and business consulting. Over the years, he has advised numerous individuals and professionals, startups, and corporate matters on on matters relating to taxation, compliances, and financial management. His practical approach and deep understanding of tax laws have helped thousands of taxpayers make informed financial decisions. He is also now actively involved in driving financial awareness and leveraging technology to simplify tax compliance through innovative solutions. Today, he will share with us some valuable insights on ITR filing. Ladies and gentlemen, please join me in welcoming Sia Ajay.
Thank you, Ashi, for the warm welcome, and looking forward for insightful session and getting some insights from Mr. Patel. Thank you.
Great, sir. Let's begin.
I think there's some issue in the audio. We are not able to hear you.
Yes, sir.
Yeah.
Here are some common questions people had. Uh, is income up to 12 lakh completely tax free even under the new regime?
Yeah. So I think this is the confusion across taxpayer. So before we get into the 12 lakh rupees, let's understand the what is the new regime and the old regime, because that will lead to this answer. So let me just give a small background of how this regime has evolved. Over a period of time, if you see the tax payment is always about gross income and the deductions, because over a period of time, government has given a lot of investment opportunities and deductions to reduce the tax burden. However, this has become more and more complex, and over a period of time, government does not felt that it requires some sort of incentive to trigger the investments, and therefore, in last couple of years, government introduces tax regime where deductions have been done away with. However, at the same time, the slabs has been increased to reduce the tax burden. So the old regime is all about lot many deductions by which you can reduce the tax burden. At the same time, government has introduced new regime where the most of the tax deduction has been done away with. However, at the same time, government has increased the slab to reduce tax burden. Now coming to the rebate part, because if you see this 12 lakh rupees is a kind of tax slab about 12 lakh rupees. For example, first of all, 12 lakhs limit which you just mentioned is all about the new regime. We are not talking about the old regime. Suppose if your gross income, which is mostly without deduction because it's a new regime, if the gross income is less than 12 lakh rupees, what will happen? When you compute the return will compute the tax. However, if the income is less than 12 lakh rupees, it gives a rebate, which is kind of discount. So if it is, for example, if your income is 10 lakh rupees, still the computation will happen. However, since the income is lower than 12 lakh rupees, it will give the 100% deduction in form of rebate. If it is more than 12 lakh rupees, then entire tax computation will happen based on the slabs. It will not like the case that up to 12 lakh rupees zero tax, and after and the income will start income tax will start getting computed from 13 lakhs. So just to summarize, if your income, first of all, if you are a new regime and if your income is below 12 lakh rupees, 100% tax rebate. However, if you are in new regime and if your income is, for example, more than 12 lakh rupees, then the tax will be computed as per the slabs prescribed for the new regime. However, this is not applicable for the old regime. Old regime, there is a limit of 5 lakh rupees instead of 12 lakh rupees. Up to 5 lakh rupees, if you are in the old regime, 100% tax rebate, which is as good as discount. And if it is more than 5 lakh rupees in the old regime, the tax computation will happen based on the normal slabs. Second, this rebate is only applicable for the tax payment which are based on the slabs, which is your normal salary income, business income, or other income. However, if you are paying the tax under the special rate, for example, capital gain in the long term, where actually the tax liability is lower than the normal slab, which is 12.5%, or any other tax, then the rebate will not be applicable.
All right, so I think that also answers majority of the question that what is the difference between old and new tax regime. Is there anything that you guys want to add to highlight the differences between, the old regime and the new regime? Anything more that you would like to add?
See, in case of, let's be very clear, like for example, if I'm a taxpayer, there is always a confusion that which regime I should go for. So it's all about, if you just have to see your computation. If you are a salary person, already a lot of deduction would have been given in your form 16. Just go through the form 16. Are you taking the benefit of HRA? Are you taking the benefit of home loans? Are you taking the benefits of investment you have done? Then obviously the old regime is more beneficial because there is a lot of deduction you are claiming. However, let's take example of businessman. Now, businessman does not get a benefit of HRA, which is a major component when you are claiming the deduction. Then obviously the benefit will be more in case of new regime. So new regime is all about no deductions, but simplified taxation, good, higher slab where the tax will be higher in case of higher slabs. However, if you have good amount of deductions, then please go for the old regime. At the same time, see, more important, if you want to make things simple, if you don't have much benefit in terms of deduction, better to go for the new regime because it's very simple. Or even for the government, it's very easy to process the tax returns because there's nothing complicated, right? It avoids the litigation also.
I think, Ashi, it is important that in each case, one should evaluate which regime is beneficial for him. And at least, like if we see that salaried earning people have the option, I mean, each year they can choose in terms of which is more beneficial for them and opt for it. So that will be crucial that like the benefits which are available in old regime and new regime, you compare both, compare the tax rates and the exemptions which are available, and see the most beneficial one and go for it. And in this case, it is generally advisable that you take the help of expert in the particular matter who have relevant experience and understanding, because we see sometimes knowledge gap is there, or people who don't understand the subject and go based on the advice of the friends may end up losing money in tax. So that is something one should take care.
Yeah, and just to extend the discussion, for example, uh, somebody will ask you the question whether if I have opted a new regime, which is a default regime. Suppose if you don't go for specific, like when you filing a return, by default is a new regime. The system will select the new regime. In case if you want to go to the old regime, you have to specifically select old regime. Otherwise, by default, system will select the new regime. Second part, now can I shift if I have selected a new regime in one particular financial year or the assessment as the case may be, can I shift to the old regime? For salary people, answer is yes, they can shift every year. However, if you're a business and if you are already opted for the new regime, you can't go back to the old regime. So you have to be very precautious. You have to take a very cautious selection, uh, depend upon kind of head under which you are paying the tax and whether your regime is tax efficient or not.
Yes, sir. I think it's a very serious decision to make, and it can also result in, unnecessary litigation and your refunds being tied up. So I think
Yeah.
going with CA assisted filing is always the better option. Uh, Continuing with our questions, I are there, since you said that there are no deductions, there are no debates under the new tax regime. So does that mean that there are no tax saving opportunities under the new tax regime?
Yeah. So first of all, let's see the what new regime offers to us. First of all, it offers a lot of simplification. That's the first thing. Let's what's the pros and cons, right? The first is it's a very simple regime because there is no many deductions. Second, how you will save the tax because if you the slabs, normally in case of old regime, the 30% slab start from the income more than 30 lakhs. Income more than 10 lakhs, my error. However, in case of new regime, it starts from 24 lakhs. So obviously there is a lot of tax arbitrage. That's the first thing. So please see tax slabs very carefully because that by design, without doing anything, it gives a tax saving. That's the second thing. Third thing, there is a specific benefits which are more in case of new regime, specifically NPS. If you are an employee, if you are an employee and you are serving any organization, in the old regime, the contribution, for example, the contribution generally two ways the contribution happens: employee contribution and employer contribution. In case of new regime, in case of NPS, there is no benefit. In case contribution is by the employee. However, in the organization, employer also contributes. And if you're opting a new regime and you are going for NPS, and if the NPS there is a contribution by the employer, up to 14% of your salary, gross salary, you can get a benefit of tax benefit in case of new regime. However, the same benefit is up to 10%. So actually, new regime in case of NPS gives a more benefit. Second is the standard deductions. In case of standard deduction, if you're a salary person and getting an income from the salary from your employer, the new regime gives a 75,000 deduction, standard deduction. However, the same deduction is in 50,000. So obviously, we are not saying there is a no benefit. First benefit is obviously a slab, which gives a by design benefit. You don't have to do anything at all. Second is NPS and the standard deductions. And third is obviously a more qualitative part is your simplification, which gives a lot of ease in terms of filing of return. And third is obviously avoiding lot many litigations over a period of time.
All right, sir. And you also mentioned how, once you switch to the new regime, you might be, logged into it. So is that for everybody in general, or does it differ across, salaried people, HUFs, business taxpayers?
Yeah. So as I mentioned that once you opted for new regime, let's take example. I am a salary person. I am in the old regime. Can I move to new regime? Yes. Second question is, can I move from new regime to old regime? Yes. This is for salary person. Now let's take example of business person. Business person has opted a old regime. Can I opt for new regime? Yes. Can I go back to the old regime? No. So for business, there is a specific restriction. You can only move to new regime. It's a one-way traffic. You can't go back to the old regime. However, for the salary, government has given a relaxation. You can go from old to new and vice versa.
Okay, okay. So that's good to know, I think. That gives us everybody a lot of flexibility. And again, I think only reinforces Sir's point that it's very important to check which one is the beneficial one for you that
Yeah.
particular financial year, especially. So, Sir, this time for the first time, I was filing taxes for myself, and I heard a lot of terms such as AIS, TIS, Form 26AS being thrown around.
Hmm.
But to me, who has never, had
example, like in the business, if I have given a loan to somebody and I am earning interest on that, okay, so that interest is something which I am supposed to offer it, and it will not be part of the AIS which is there. Now, if somebody is doing transactions in capital market, maybe transactions related to intraday, FNO, etc., which is there, one should really see that whether everything is getting covered there or not, and the numbers which are reported align with the reports which are available from individual portals, to ensure that the tax filings are correct.
Yeah. And second is that now, if you see, there are many taxpayers generally don't go through the AIS or TIS or 20CS properly, and generally it leads to the litigation, unnecessary litigation, because it's a factual information, right? Either you do the proper reconciliation, you should be fully aware that why you don't want to report this transaction. But not going through the AIS, TIS, and 20CS and just filing a return based on your own record without reconciling, there is a 100% chance that it will lead to litigation. And especially if you don't report in time, because still government will give you opportunity to correct, but if you don't correct on time, there is a 200% penalty of under reporting the transaction. And as a taxpayer, because I have seen the journey last 15 years, the data sharing has become very, very widespread, and it is going to increase only because as we increase the digital economy, because earlier the challenge was sharing the data. Now the challenge is not sharing of data. Now the data will come from the multiple sources, and government has a lot of tools by which they are analyzing data, by which they are. It is a very personalized tracking now. Though we may see how the government will able to find out the tax liability based on data person wise, but government has that capacity and the infrastructure to personalize the tax liability depend upon this data. So as a taxpayer, we should be very careful. We should not we should be taking, I would say, notice of all this data before we really file the return.
Yes, sir. I think also, as you talked about, sometimes how ignoring AIS might mean that they miss out on reporting interest income. In your experience, what type of mistakes do people do in reporting capital gains and interest incomes?
Yeah. So let me just elaborate as a by example of capital gain. So if you see in case of AIS, let's take an example of a house property. Like a taxpayer has sold a house property. Now, how the government gets this data through AIS? Because if you see when you sell the house property, you register your house property transaction in the registrar, where you pay the stamp duty. They will record your transaction. They will change the land record. At the same time, this data is being also shared with the income tax department, especially if the transaction is more than 50 lakhs. So you are selling a house property, parallel data is going to income tax. And this data will again come back through AIS. Now, the government has a data of your sale, but government does not have a data of your purchase, right? So government will only give you, okay, this is your sale. Now you please report other transactions by verifying your own record. So you have to verify your own purchase value, which you would have purchased in the past. Second, there is a possibility that you would have claimed the exemption because government give a lot of exemptions on the capital gain. Suppose if you sold the house property, you can buy one more housing property, and government might you might be eligible for 100% deduction or partial deduction. Now, purely relying on AIS will will increase your capital gain because you are not claiming your purchase transaction properly, or maybe you are not maybe claiming the exemptions properly. So just to, because AIS is a starting point, verify your records, see whether you are eligible for an exemption or not, verify your purchase transactions, verify your improvement would have also done because you do a lot of improvement in your house property also, right? That is also eligible for deductions. So all these transactions are out of AIS. So AIS is a partial picture, and through your record you have to make the picture full.
I think one should understand. I mean, it gives you the transaction details, but what is the nature of transaction is only the taxpayer is aware of it. So if you are doing trading activities in capital market, then the dates of purchase, sale of purchase, whether it's a short-term gain, long-term gain, that classification is something you will be able to do it. Okay. Similarly, in case of the example which Mr. Patel has shared, that if the property, when it was purchased, what is the cost of improvement you have incurred for it. I think the data is not available in AIS. So to compute the right amount of tax liability which is going to come, one should have all this information and offer that. Okay,
Yeah.
and more importantly, like looking at what are the exemptions or benefits available to minimize the tax liability. That is also something which is not part of the AIS.
Yeah, let me give a very classical example because I think in the past
Yes.
we have helped one of our colleague, one client. What happened? He was the NRI, and he was holding a property from since 1992. He was the owner of that property since 1992, and he sold this property in 2016. And since he was NRI, he never filed the return. But this data was available with the government. What happened? Somewhere in 2020, during the COVID period, government issued a notice to this person that you have sold this property for the worth of 56 lakh rupees. Please submit your return. Now, since he was an NRI, he was out of India, he never got this notice. So what happened? Government, since there was no reply from the taxpayer, government assumed that entire 56 lakh rupees is your income. And that too, since government does not have purchase data, they assume it's a short-term capital gain. Because if you see, the short-term and long-term capital depend upon how you're holding the property. So government assume it's a short-term. Second, there was no purchase value. They assume it's a zero. So entire value which they have received from the housing property assumed to be a income without giving a deduction, and assumed to be a short-term capital gain, and by which he was on the higher tax bracket. He would have easily checked the data. He would have put the purchase value, which is 1992, which is a substantial, because if you put purchase values in from the year 1992, you will get a substantial deduction. Second, ideally you would have been on the long-term capital gain instead of short-term capital gain. So this is the error. Small error will lead to a very big liability. Not only liability, interest and penalty. Obviously, when you fight a litigation, you will avoid all this liability by giving a data to the government, but still there is a pain which you have to go through, right?
Yes, sir. I
No,
think smart filing, we can avoid a lot of, litigation and even monetary headaches.
Just to adding one more point, whether we should do a tax planning at the time of filing return or it's a ongoing process. I would say it's an ongoing process. Ongoing does not mean you have to do daily. Sit with your tax consultant, advisor once in a year. Try to foresee all the transaction, give a visibility to your consultant so that they can plan it properly. But because once the transaction happens, you can't reverse the transaction. And once you can't reverse the transaction, you can't do the planning. Planning is all about before you do something. Proactive. Planning is all about doing something before it actually happens. So return filing is tax advisor. I think that will, I think, ease out a lot of pain which you might have to go through. Skip certain steps, critical steps.
Ajay, sir, anything to add?
no, I think similar to what Mr. Patel has shared, I have also experienced one of my close friend. He was in the business, okay, and due to some family issues, way back in 2018-19, they could not file the return, and due to problems in the family, the business was discontinued. Okay, now for 2 years, there was the banking details, but they didn't file the returns. Since business was discontinued, not much awareness was also there with them. They didn't bother to check in terms of whether the business accounts are prepared, audit is done, or return is filed or not. But what we saw is down the line 3 years, they got a notice from income tax department, and whatever amount they have deposited in the bank account, department has considered that this is your earnings, and on the entire earning, the tax liability was computed along with the penalty. They got the notice. Okay, now this is a classic case. Like, since you have not filed the return, you could not claim. Though business was in the loss, there was no profit, but department has assumed that whatever banking has been done is your earning. You don't have any expenses. Now pay tax on the entire amount. So not filing return can lead to such a big liability, and I mean, replying to that notice and getting a resolution to that took my friend around 3 to 5 years. Okay, and today also the liability is minimized, but it is not zeroed down. It is still
Yeah, yeah,
under litigation. Okay,
yeah,
so it is important that the transactions which are given in the AIS, I mean, one should be aware and have a very solid reason in terms of why these are reported there and how they have been considered while filing income tax return. If you ignore those transactions, it may cost you in the future.
yeah,
And
yeah.
one more thing which Mr. Patel has said about the tax planning, I think right now is the best time to plan for your next year ITR. I mean, for the next year, what is your liability going to be there? If you start planning now, then you can save something. For the year gone by, the opportunity is lost.
Yeah, just to, because based on my experience, if you see how the tax life cycle happens, first is planning, second is what you plan, you execute as per the plan. Obviously, there could be some uh, course correction can happen. Once you execute, you report properly. In case, for example, if you miss reporting, try to see that when you have this litigation, then try to reply as precise as possible. So if you see, if you do a planning properly, the majority of the litigation risk is getting covered at the planning stage itself. And if you report properly, almost 99% of litigation risk goes away. So actually, people spend more time in return and less time in planning. I would always advise to whosoever, please sit with your tax consultant and have a good tax consultant who are giving you a really go into depth, understand your transaction detail, spend time with them in a 1 day or 2 day as the case. Give a full disclosure to your tax consultant so that they give a full visibility so that you can visualize entire transaction before transaction happens. And once you execute a transaction, and if there is a variation, please again come back to your tax consultant. Okay, this is a change which was happened as per the plan. Execute the transaction, and then almost once you do this properly, almost your 70 to 80% risk goes away. Remaining is 20%. Once you report properly, almost 99.9% risk is goes away. There could be some queries still could come, but at least your major groundwork is ready to reply to your authority. And and if you ask me, since I am the tax background, once you have done the planning properly and once your execution is properly, it's a very easy to reply to the tax authority. But if you see, if you don't execute your transaction properly, your tax consultant will be helpless to give you support. So please understand the life cycle is all about planning and execution and then reporting and then litigations. People assume that ITR फाइल करने के बाद सब काम चालू होता है litigation. Actually, the litigation का base starts from when you do the planning. So I will strongly recommend people to have a good tax consultant, have a good planning and good reporting. That's all.
That makes sense. I think you guys really simplified it so that anybody who is not even of this background can understand. I think we are receiving a lot of questions about, how to choose the correct ITR form. So if we can go over that really quickly, and then we can take the questions one by one relating to people's specific cases.
Yeah, Mr. Jain, you want to take this question? Yeah.
Yeah. So, I mean, if we have to say this year also government has tried and simplified the forms which are available. Commonly, people use ITR form 124, which is there. So, if suppose you have salary income, you have couple of house properties, which is there, and limited amount of capital gain, then one can go for ITR 1 form, which is there. Now, if you have income from business and profession, then you can go for ITR form 3 and 4. 4 will be applicable in case you are not maintaining the books of account and going for a presumptive taxation, which is going to be there. And in otherwise cases where you don't have business income, like say you have salary income, house property income, capital gains, then you can go for a ITR 2, which is available. Now, there are certain terms and conditions also which are applicable for each of the form. So one has to really see to it that those terms and conditions are complied while you are choosing it. So in short, we can say ITR 1 form which is available for people who have the salary income. If somebody is having salary, house property, capital gain, then you can go for ITR 2. If you are in business and profession, you can go for ITR 3 and 4. But be mindful of certain terms and conditions which are attached with each of the firm, like what is your residential status, whether you are director in a firm, whether you are a partner in a firm or not. I think these things will also decide which is the right firm for you. But what I'll say is one should assess carefully before choosing the form which is there. Okay, because each form will have required disclosures. If your selection of the form is not correct, your return may also be wrongly filed because you may miss out on reporting certain incomes and deductions which are applicable in your case.
All right, so we can quickly go through everybody's case by case questions. Chancel Singh asks, I work in a private limited company and also I'm doing active trading in stock market, including FNO. Which ITR form will be applicable for me? Can I file return under the new tax regime?
See, all depend upon, see, as I told you that since the person is also having the salary income, so we have to see the what is there any deductions available. Obviously, capital gain is a very simple. It doesn't matter whether old regime, new regime, because capital gain, if you're on short-term capital, it depend upon the slab. In case of long-term capital gain, whether it's a new regime or old regime, tax rates remain the same. So, just to answer your question, is more about whether you are getting a deduction or not. If you're claiming HRA, if the HRA is a substantial amount, because in cities like Bombay and Delhi, the HRA component is quite significant. So, might be possibilities that old regime is more beneficial. If the person is having your own house where he does not pay HRA and there is no claim of interest expenses on the house loan, then new regime might be beneficial. It all depends case to case basis. There is no thumb rule that go here and go there. See your data, see your income profile, and then decide.
I think, Ashi, in this case, it is also important that capital market transactions one can classify in terms of short-term gain, long-term gain or loss, which is there, and intraday and FNO related activities. Okay, and
Yeah.
that will require separate disclosure, and the type of return will also change according to that. So one should
Yeah.
really segregate the transactions which are done and accordingly choose the form which is applicable.
Yeah, and since see, this FNO is a very buzzword. So FNO, please understand that there is a specific way how, because FNO is a business. It's not a speculative income. Because speculative, somebody will say it's a speculation, obviously, but government has not treated this as speculative income. There is a specific definition under which it falls, and it does not conclude it's a speculative income. However, it's a business income, and whatever computation methodology applicable to the business will be applicable to the FNO. So it's a very specific case. So maybe if you have a more specification, please go back to your consultant, take their advice, and accordingly you do your computation.
All right. So, also Desmond Thomas, along the same lines, asks, I own two houses and I do very limited trading in the stock market. I work in a BPO. Which ITR form is applicable for me?
So he's also doing the FNO trading.
No, sir. They said that they do very limited trading in the stock market. They didn't mention what type of trading, whether derivatives, FNO, or
Yeah. So
others.
yeah, let's assume it's not a FNO, it's a trading. So generally, if you're not in a business, because as he mentioned that he's serving a BPO, so pure spurry, that is not his business. So generally, this anyway, salary part is very simple. It will go back to the salary, but this will be treated as a short-term capital because he is not a business in the trading. His full-time job is serving a BPO, and he is doing a trading which generally treat as a short-term capital gain, which is he's buying today and selling tomorrow. So his income is capital gain plus salary. So generally ITR2 should be applicable. So
All right, sir.
please understand it's a very 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 thin line because you please be clear that trading and for say as a layman it's a trading for from the tax point of view the tax authority will may treat as a trading may treat as a capital gain all depend upon what kind of business you are carrying. There are people who just do the trading, he does not have any, so they might treat this business as a full-time trading job and it's a business income. As Ajay Patel, I am serving a company part-time or maybe just once in a while I do the trading, then I am not in the business of trading, I am in the serving to the organization. For this income it will be treated as a capital gain. So it's all depend upon nature of activity that person is conducting and nature of transaction.
Yes, sir. So this person says that they do work in a BPO and they do very limited trading in the stock market and they own two houses. They don't specify that if they have sold those two houses or bought those two houses recently. So
Yeah.
they just asked which form is
Yeah.
applicable for them.
So
But
anyway,
I
I have touched upon the trading part because that might be treated as a capital gain. Coming to the houses part, because if you two houses, the if you are owning a two house, so generally this two house will be treated as self-occupied. Self-occupied means I have not given anyone. It is assumed that this two house will be given and you are using for self purpose. Self-occupied means self-use purpose. Suppose if this person owns a third house, he already has a two house. There is a one more house he's purchasing. He is not giving on rent, but government will presume that third house is given on rent, and there will be a notional rent which will be added in his income, subject to there is certain deduction which will be given as a benefit. Third house will be treated as on rent, and there will be a certain income which will get added into his income statement. So two house it is assumed that he will use for his own purpose, and third house it is assumed to be given on rent, even if it is not on rent.
oh, all right, sir. I think yes,
Actually, based
Saji
on,
sir.
I mean, the limited information which is available for the user, I believe it should be either ITR 1 or ITR 2 which will be applicable
Mostly
in this
ITA
case.
two.
But yeah, okay, but that can be, confirmed once we have more details. So we'll suggest, I mean, user can send us on a DM and then we can get back to him.
Yeah, yeah.
All right, sir. So moving on to the next question. So recently it has come in the news that foreign assets and crypto transactions, they are under a lot of high scrutiny from the income tax department. Why do you think that might be?
See, if you see this foreign assets, because if you see people are parking their some amount to the foreign asset, because if you see the Indian government does not have a power to levy the taxes on the foreign assets because it's out of their limit, right? Because tomorrow, suppose somebody wants, suppose for example, a foreign broker, if he wants, if he can't, he will not abide by the law of India. So government wants to track, कि, for if I'm the taxpayer, have I invested something outside the India? If something is there, I have to report. If I don't report, there is a heavy penalty because tomorrow, as an Indian citizen, I am liable to pay tax on some foreign assets also. The government want to track these foreign assets. For example, I have transfer my remittance to the US to buying the stock in the US. Now this US stock might give a capital gain in future, might give dividend in future. Now government does not have access to this data, right? Unlike your local, for like AIS will not throw you the information which has been for the transaction which has occurred in the US. AIS will trigger a transaction which has occurred in NSE BSE. It does not give a transaction which has happened in Nasdaq or some other stock exchange which is there outside the India. So how the government will come to know transaction happening? Only through this reporting. And therefore government gives a very stringent mandate, please report your transaction. So tomorrow, if there is an income on this transaction or on the asset, government can track this transaction and accordingly levy the tax.
All right, so I think that should clear it up why that's been floating around in the news.
Yeah.
I've also been hearing a lot about something called Section 87A. So what is it exactly? The rebate?
I think 87, I think we have discussed, like just discussed in the first question, is a 12 lakh rupees rebate. So 87A is a rebate, it's kind of discount. Let me just give you a very simple example. Okay, there's a discount. For example, you are liable to pay to someone 100 rupees. Now that person saying, don't give me 100 rupees, give me 50 rupees. So 50 rupees is a rebate. At the same way, government also gives a rebate. Government system will compute certain tax. For example, 100 rupees tax will be computed. Government will say, okay, your income is less than 12 lakh rupees or 5 lakh rupees based on the tax regime you are selecting. I will give you 100% rebate or some other rebate. So government will compute your tax since your income is lesser than 12 lakh rupees or 5 lakh rupees, as the case may be, depend upon tax regime, they will give 100% discount, which is an income tax called as a rebate, which is section 87A.
Oh, so that makes sense. So in
Yeah. Just
today's
to elaborate this point, generally there is a confusion between rebate and exemptions. Let me just clarify what is exemption and what is rebate. Exemption is that when the computation happen, if somebody says your income is exempted, it will not part of your income computation. That is called exemption. Somebody say what is rebate? Still, it will be tax will be computed. All the income will be added in your gross income. Tax will be computed, and thereafter we will say, "Tix, your tax is computed. I am giving you 100% rebate, so your tax will be reduced by certain percentage, maybe 100%, 50%, depend upon the rebate condition." So exemption is income is will not added. Rebate is income will be added, tax will be computed, and discount will be given, which is in income tax called as a rebate.
thank you, sir. So
See,
actually, that
Rashid,
confusion was there with me also.
yeah.
Thank you
I
for
think
that.
there's a lot of confusion around this 87A rebate which is there, whether it is available only in the new regime or whether it is available or not in the old regime. Okay, so as Mr. Patel said, like this is available. Okay, so up to 12 lakh rupees rebate is available in the new regime, and up to 5 lakh rupees it is available in the old regime. Okay, whatever taxes coming out in the computation, that will be discounted, like consider it as a discount which is there. No, I mean sometimes there's also confusion between 87A rebate and the standard deduction which is available for salaried people. Like okay, so in the new regime, salaried people have deduction available up to 75,000 rupees, and in the old regime deduction is available up to 50,000 rupees. Okay, so if somebody has a salary of say like 12 lakh 75,000 rupees, so in after applying the standard deduction, his salary will become taxable salary will become 12 lakh rupees, and on that if 87A rebate is applied, the tax liability will be zero. Now, if similar case we have to see in the old regime, if somebody has a salary of 5 lakh 50,000, apply standard deduction of 50,000, taxable salary will be 5 lakh, and on that if you apply 87A rebate, your tax liability will be zero. Okay, so one has to consider that what is the taxable income after standard deduction. On that, what is your tax liability, and whether the benefit of 87A is available or not on that.
Yeah. Just to make it more conceptually, if you see now why the rebate is there, you might somebody ask, sir, if you want to give a benefit, give it in the exemption only. Now, why you are adding unnecessary rebate part? So if you see India is a very complex society, because if you see economically, there is a diversity in the society, right? There are some diversity more from the economics point of view. I may be in the lower class of or middle class, so government wants to give a specific benefit to me as Ajay Patel since I'm on the middle class or lower class. But government does not want to give same benefit to the other person who is on the higher. So rebate is a mechanism. They want to differentiate between the two part of the society. On the lower segment, on the middle segment, you please take the benefit. However, as I move into the higher segment, government don't want to give a benefit. So rebate is to differentiate the tax liability on the two segment of the society. However, exemption generally are applicable to everyone. If, for example, slab-based taxation. Slab-based taxation is applicable to the person who is earning 1 crore or he is earning a 5 lakh rupees. But rebate is only applicable to person who is earning a 5 lakh rupees. So rebate is all to taking a segment out of tax and giving a specific benefit to the specific society, specific segment of the society. More on the economic part, economic and policy part.
All right, so I think in the same vein, Malhar Joshi, she asks, I am working in a company and my CTC is 11 lakhs. I also earn interest and dividend of 2 lakh in a year. Which regime should I go for? Is my tax liability really zero?
See, let's assume that there is no deduction. I'm assuming there is no deduction. So obviously, new regime will be more beneficial because your tax slabs are rationalized. And obviously, if we, for example, if you salary may, if because of some NPS or some other reason, if the salary income or total income goes below 12 lakh rupees, then there is a zero liability. And even if it goes above 12 lakh rupees, still, if there is no deduction, the new regime will be more beneficial of since the tax slabs are more rationalized in the new tax regime. But still, again, coming to the point, Please verify your deductions if there if any, and then decide whether you want to go new regime or old regime.
All right, sir. So,
Focus on deduction. Most important, focus on deductions. If you want to decide regime old or new, if deduction, just go quantify your deduction, then decide. No deduction, just go to the old new regime. As simple as that.
all right, sir. So, so one of my last questions for you today is, we heard today a lot about the taxation, the taxation system, but one word that I was hoping to hear was what is the presumptive taxation scheme, and what that is. Can you explain? Because when I tried understanding it, it sounded very complicated. It sounded very new to
Yeah,
me.
yeah. So let me just give you very simple. Let's make it very simple for everyone. I'm a businessman. As a businessman, I'm the I'm the professional or a small trader, one person army. I only do the collection. I am responsible for selling the goods. I am responsible for ordering the goods. I am responsible for everything in the shop, right? Now you are telling me to maintain a books of account. Very complex, right? And if you don't maintain the books of account, how you will come to know what is your profit? So government says, since you are a very small businessman, don't maintain the books of account. If your turnover is less than 2 crore or 3 crore, as the case may be, you just take your turnover. For example, 1 crore is my turnover or 50 lakhs my turnover. Apply 8%, that is your profit. Pay the tax, depend upon the slab. So that is a presumptive
Wow.
taxation. It's a
Yeah, that
like
makes it very
as a,
easy.
as a profession. For example, you're a doctor, small doctor running a small clinic. He will not have accountant, right? But he has a lot of UPI payments. He's a professional. Government says you are professional, small professional, your income is less than 50 lakhs or 75 lakhs, as the case may be. Government don't maintain the books of account, offer your 50% of your income as a profit and pay the tax. So this is a presumptive taxation. One presumptive taxation for business, trader, manufacturer, whose turnover is less than 2 crore or 3 crore, depend upon the scheme. If you're a professional like accountant, CA, doctor, your turnover is less than 50 lakhs, then apply a presumptive taxation 50%. So two presumptive scheme, one for professional, one for business. No need to maintain the books of account. Go and relax, pay 8% or 50%, depend upon the nature of business you are running or nature of profession you are running. Pay the tax and close the transaction. No need to prove reduction. Nobody will ask you how you made a deduction of 50%, how you computed for 8%. Absolutely, government is not going to come to you. For small business people like me or small professional like me, government has given us benefit. And generally, I would highly recommend small businessman or professional to go with the scheme. Very simple way to report your transaction, simple way to return a file, simple way to file your return, and the most important, it will avoid a lot of litigations. But be careful, this presumptive taxation is only applicable for business. If there's a capital gain, the capital gain computation will happen as happened for any other taxpayer. Ajay, you want to add anything?
Yeah, I think it is part of the government's initiative of ease of doing business, okay, giving relief to the small taxpayers. Uh, as Mr. Patel said, like this is litigation free. If you go for this, presumptive government has assumed like if you are doing this level of activity in the business, this is going to be the minimum amount of profit. And if you are declaring that, there is no need to maintain the accounts. You can simply pay tax on this particular amount and be relaxed. Okay, but one has to also note a point that this is a minimum profit. If somebody is making higher amount of profits on the business and he wants to declare that, that also can be done. Okay, so
Yeah.
like 8% or 6% limit which is there, that's a bare minimum if you are opting for a presumptive taxation scheme. If you are earning more than that, that can be declared and on that tax can be paid.
Yeah. And you have to be very careful that once you select this regime, once you go presumptive taxation, you have to continue for 5 years. And 5 years means suppose today this is my first year. I have gone for presumptive taxation. I have to continue with the presumptive taxation for next 5 years. In case if I go back to the normal way of computing the profit. I have to get my account audited, and then I can't go back to the presumptive taxation. So we have to be very careful. So at least project your business growth. If you are growing business, if you feel that my turnover is going to increase or my profit will be lesser, because there are many loss making businesses also, right? Because it's really startup world, then be careful. Then please go. Then if you feel that since I'm a startup, I'm going to make up losses for few years, then don't go for presumptive taxation. Go with the normal taxation. Maintain the books. Get your account audited. So please